Going to call this meeting to order. We are now convening our public session, starting with the Committee on Finance, which will be chaired by Commissioner Bagger. A public meeting of the Committee on Capital Planning, Execution, and Asset Management, which will be chaired by Vice Chair Linford, will follow the Committee on Finance. We will conclude the public portion of today's meeting with the public board meeting. Today's public meetings are also broadcast live on the Port Authority website for those interested in viewing today's proceedings via the Internet. Commissioner Bagger.
Thank you, Mr. Chairman. Today's meeting of the Committee on Finance is being held in public session. The committee also met earlier today in executive session to discuss and act upon matters relating to ongoing negotiations and reviews of contracts or proposals. At this point, I would ask our acting board secretary to advise those present of the composition of the committee and whether we have any recusals on our agenda items today.
The committee is composed of Commissioner Bagger as the committee chair, Commissioner Eve as the committee vice chair, and Commissioners Horwitz, McCabe, and Pacino. All committee members are present at today's meeting with the exception of Commissioners Pacino and Eve. There are no recusals.
Great, thank you. We have two agenda items for our committee meeting today. The first is to take action on our plan of financing, which we do every 3 years, to consider that and consider recommending that for a board action later today. And then following that, we'll have our quarterly update on our unaudited financial performance results. But we'll begin with the plan of financing, and our Chief Financial Officer, Libby McCarthy, will tell us about it and the significance of it for the committee's consideration.
Thank you. 3 years, which one includes the authorization for additional series of bonds and notes, and 2 allows for the continued issuance of other debt instruments, including versatile structured obligations, variable rate master notes, equipment notes, and commercial paper. A plan of finance is similar to a corporate shelf registration. The recommended plan of financing has an aggregate principal amount of not to exceed $8 billion with a true interest cost not to exceed 8%. The plan of financing is a process we undertake to meet the IRS Tax Equity and Fiscal Responsibility, or TEFRA Act, requirements related to the issuance of private activity, or in our case, alternative minimum tax bonds, that we use to fund construction at our aviation and marine port facilities. This process requires a public notice, which includes a description of the plan of finance and a listing of the projects and a public hearing and approval. It's done to ensure that the public is informed about how the funds raised through the bond issuance will be used, and how we will use our alternative minimum tax bonds over the next 3 years. Although the process only applies to our AMT issuances, in the interest of transparency, we have developed a comprehensive plan that includes all of our issuances. Our public notice was placed in the New York Times, the Star Ledger, the Bergen Record, and on the Port Authority's website on July 10th. Hearings were held on Tuesday, July 24th in New Jersey, and on Wednesday, July 25th in New York. The New Jersey meeting was attended by Commissioner Bagger, and the New York hearing was attended by Commissioner Eve. We received no comments on the plan. The plan also allows for the continued issuance of variable rate master notes, subject to an aggregate outstanding amount of $400 million, commercial paper, subject to an aggregate outstanding amount of $750 million, and equipment notes, subject to an aggregate outstanding amount of $250 million. In looking forward, our financing needs over the next 3 years, we anticipate a new money need to fund our capital plan of approximately $3.5 billion, and we have some refunding opportunities depending on market conditions of roughly $2.5 billion. The authorization will provide us with flexibility to structure various issues to maximize our savings on refundings as well as to provide the lowest cost of financing for our new money issuances and to timely enter the markets. While the plan of financing provides the advanced authorization, it's important to note that each bond sale will continue to be authorized by the Committee on Finance that would not bind the Port Authority to any specific issuances, but rather would provide us that flexibility to structure the debt portfolio based on capital requirements. In essence, the Board is authorizing the resolution for each instrument. Those resolutions delegate authority to the Committee on Finance to execute the actual plan of financing, and the Committee delegates to authorized staff the authority to actually sell the bonds and notes, but only if the Committee has approved such sale prior to that designation. So with that, I'd be happy to take any questions.
Great. Thank you very much. As our Chief Financial Officer explained, this is sort of a three-year plan that authorizes our bond issuances, and the specific execution of it is delegated to the Finance Committee and to the Chief Financial Officer and her team, such that each individual bond issuance or refunding is reviewed and approved by the Finance Committee before it occurs. This is so we have actually 6 different resolutions that, if this committee approves, we'll act on the public board meeting later, and it's important because this financing plan contributes to the financing of our capital program. Very important to note, however, that a very significant portion of the capital funding for the Port Authority comes from our net revenues each year, but a portion also comes from these bond issuances, and this includes both, as Libby mentioned, the new funding and also further opportunities for refunding, which is like refinancing our debt, which over the last several years has resulted in net present value savings to the Port Authority at the level of $1 billion. So it's a very significant contributor to our financial performance. Do we have any comments or questions from the committee before I ask if there's a motion from a committee member to move this group of resolutions onto the full board? Is there a second? Any objections? Hearing none, those items are approved and will be acted on in the board meeting in a little while. Our second agenda item for the committee today is our quarterly review of the financial and operational performance of the Port Authority, including the strong operational performance in the second quarter and the financial performance, which is ahead of our budget projections for the year. So, again, I'll turn to our Chief Financial Officer for that report.
Yes, again, thank you. And I'm going to be presenting our results mostly from the perspective of the 6-month results as compared to the prior year, but also in the context of our overall plan for the year. The results will be posted on our website in the corporate information section this afternoon. First, again, my standard disclaimer here, that is that these are the condensed, unaudited financial statements, and they are best understood when read in conjunction with our consolidated financial statements, audited financial statements for the year, which has its accompanying notes and are also posted on our website. As you can see from this slide, income from operations of roughly $1.1 billion, excluding depreciation and amortization, is slightly better than planned and is consistent with last year's results. Gross operating revenues are 1% over plan, driven by aviation fees and percentage rentals as a result of record passenger volumes at the airports, as well as significant capital investment, recovery of those capital investments at our aviation facilities. Operating expenses are also 1% over plan, largely due to snow response. Compared to June 30th, 2017, The PA's net position of $305 million increase in net position is $22 million or 7% below the prior year, but that was due to planned increases in our operating expenses for security and snow removal costs. Key messages with respect to these 6 months results: the planned operating expenses I just referred to allowed for that continued security investment and a robust inclement weather response. Snow and ice related operating activities increased $13 million year over year as a result of both a higher number of storms and greater accumulations. Gross operating revenues increases are largely driven by activity-related revenue streams and capital investment recoveries at our airport. Revenue growth is in line with expense growth. Here I'll focus on the gross operating revenues. You can see there's a 3% year-over-year growth driven, again, by those aviation fee recoveries. So $40 million is aviation fees, that's 7%. Due to the cost recovery. Rentals are up 4%, driven by scheduled rent increases, both at our aviation and port facilities, as well as higher occupancy at the World Trade Center and scheduled increases there. In addition, we have increased percentage rentals at our aviation facilities as a result of increased passenger activity driving tenant sales and cargo activity. Parking and other revenues are down 3%, driven by decreased parking revenues at the airports, which is partially offset by increased cargo facility charges and wharfage fees at the ports due to the 5.2% increase in container activity at the port facilities, facilitated in part by the Bayonne Bridge Navigational Clearance Project. And finally, tolls and fares are up about 0.1%, or I would say that would be flat. That's driven in part by increased path fares, but relatively flat tolls at the crossings. Here you can see our revenues. You'll see that there is growth across the board, the primary growth there being the port container activity that I just referred to, and then as well a 3% increase in international passengers, or overall passengers. International passengers drove the growth at 4.1%, with domestic passenger growth up 2.1%. All aviation facilities saw growth across both passenger categories, but Newark led with the growth of approximately 1.1 million passengers. TB&T and PATH are both roughly a 1% increase over the prior year activity. Operating expenses up 5% over the prior year, but again, that was the planned security investments as well as the impacts of that weather increases. So when we look at that, the weather response nearly doubled in compared to 2017. Employee compensation is increased 5%, and that's due to increased headcount, including additional police officers, PATH trained staff, and overtime related to snowstorm response. Contract services are increased 6%. Again, a lot of that is security driven. It's driven by contract security guard services at both World Trade Center and the aviation facilities, and an increase in some maintenance contracts, including the timing of the performance of dredging activities at the ports, and some increased performance-based payments for higher performance of the Newark Air Train. Materials and equipment increased 5%. Again, that's that snow that we keep referring to that's driving that. And then, of course, the cold weather, the colder than normal weather and longer winter increased our utility consumption across our facilities. This all led to strong cash flow and cash positions for the period. For the 6 months, the PA generated $1.1 billion in cash flow from operations, which is an increase of $119 million as compared to the prior period. At the end of the period, we had $5 billion in cash and investments, an increase of $143 million as a result of some interim and increased investment of bond proceeds, which we're going to be using for a refunding that will be done in the third quarter. And then our capital funds and available CP totaled $1.2 billion, and that will be available for investing in our program. And finally, our general reserve funds were at the required $2.3 billion, and our days cash on hand were at 232 days. Bonds and other financings, our total bonds outstanding of $23 billion increased $774 million from the year end, and that's due to issuing additional bonds for purposes of refunding, and an increase in the Goethals Bridge Replacement Program developer financing arrangement, and finally some continued investment of $30 million new money for our capital program. In the first 6 months of 2018, we had bond issuances totaling $1.3 billion, mostly for the purposes of refunding, and most of that refunding has been completed, with the final piece to occur in the third quarter of this year. And that concludes my remarks, and I'd be happy to take any questions.
Thank you very much for that report. Any questions or comments from the board? If not, let me just take this opportunity to thank you and to Rick Cotton, our executive director, and all the men and women of the Port Authority, to congratulate you on the strong operational and financial performance for the first half of the year. Great.
Thank you.
That concludes our committee meeting. Back to you, Chairman O'Toole.